dressing price. All my rings got weight. You feel that? You feel that? Hey, you heard that? Classic.
Thanks for tuning in. Jason Jenkins joining you with our Insight to Impact podcast. And today we're joined by a very special guest, Nancy Baker with MSHDA, which is the Michigan State Housing Development Authority. Nancy's been with MSHDA for 20 plus years. She's a business developer rep. It's someone that we go to quite often for our go-to questions on MSHDA. How you doing today, Nancy?
I'm doing well. Happy to be here.
Great. Well, thanks for joining us. The focus of today is going to be talking about the MSHDA program, a lot of the misconceptions and stuff that's out there about it, and just kind of educating everybody who's watching on what that program is. So, Nancy, where I want to start is just if you could give us a little bit of a history and the background of the MSHDA program.
Sure. MSHDA was established in 1966, so we're in our 60th year. That's kind of exciting. We provide financial and technical assistance to develop affordable housing, community and economic development, and homeless prevention. We're kind of a unique agency within state government. I think what many people don't realize is we are primarily self-funded. We go to the bond market, we raise money there, pay back on our loan programs, whether it's multifamily or single-family homes, also contributes to our program expenses. Beginning last year, in 2024, state government actually started allocating some money to MSHDA. I believe we got $50 million each in both those years for the Housing and Community Development Fund. But primarily, for our operating expenses, program expenses, we are self-funded, and we're kind of proud of that.
So you mentioned a lot of things about, teaching and development and whatever. So why, for somebody who has no clue or just is this the first time hearing about MSHDA?
Okay.
And there's a lot of people out there like that. We're not talking about the people who think they know MSHDA. I'm talking about people who have no idea. Why is it important of everything? Why is it important to have something like MSHDA out there?
Well, housing is foundational. It impacts just about every aspect of society that you can think of. We work very hard to lay the foundation so that we can create a sustainable housing infrastructure. Mm-hmm. And we do that by developing these programs and investing in them. In fact, last year we invested $2.6 billion. That's our fourth consecutive year of strategic growth. And that allows us to create and implement programs that suit the needs of the people of our state. Again, primarily through housing.
And you mentioned in the beginning there, you mentioned impact. And you're talking about developing the programs for people with housing. Mm-hmm. How have you seen the impact MSHDA has had on housing and maybe even housing affordability and, just housing in general?
Yeah, housing affordability is a big issue, and a lot of that has to do with the amount of inventory. Currently, we're facing a shortage of approximately 119,000 units. That is a combination of both rental and home ownership. On the rental side, we have a multifamily development program where, we make loans to developers at attractive rates. We also have the low-income housing tax credits that contribute to that to develop those units. On the home ownership side, we have programs that offer down payment assistance, lower interest rates, below market interest rates as a rule, to encourage home ownership. Home ownership is my actual wheelhouse. We have had record years for the past 3 years as far as getting families into homes. And that has a huge impact when you're talking educational levels, when you're talking community development, when you're talking crime rates, when you're talking drug issues, when you're talking unwanted or teenage pregnancies. All of those things are impacted by people being able to be in their homes. So we see MSHDA as a very important cog in the state government wheel.
So with MSHDA, we have the DPA program and we have the non-DPA program. So a couple things off that is, one, can you just give us a brief description of what's the difference?
Yeah, well, our DPA program provides funds that allow people to help cover their down payment, closing costs prepaid. It's a $10,000 zero interest loan. Now, for folks that don't need down payment assistance, MSHDA is attractive to them because they can generally get a lower interest rate than what they can in the marketplace. And that's not always the case, it's a function of the bond market. But I would say 80-85% of the time, our non-down payment assistance rate is less than what people are going to be able to get just going to the private sector. Additionally, if someone's using our conventional program, they can get a break on their mortgage insurance rates. Sure. They're quite attractive under the MSHDA program.
And it's funny you were talking about that because going into the new year that we're going into 2026 now, I personally was doing my own year review. And on my MSHDA loans I did, and it was maybe 18% of my clients were using the MSHDA program. Now, out of the MSHDA program, out of that 18%, about 50 of them did not use the DPA, which I found very interesting. But that's also, I think, something out there a lot of people don't know about, right. Is they always think assistance, and they don't realize that it can be advantageous for somebody to use it without. So what numbers did you see? Did you see a change? Because I thought that was a significant one. But have you seen significant changes from 24 to 25? Maybe as families helped, or, maybe the number of new agents that have been exposed to the program?
Okay, that's a really good question. Let's talk about agents, and by agents, I'm assuming you mean real estate agents.
Yes, sorry.
And we just started within the past year keeping track of actual agents that are involved with those loan programs, if the lender can provide us that information. Based on the number of continuing education classes that we did in the past year, I would say that the increase in the number of agents aware of MSHDA is significant. Personally, I think I did 40 continuing education classes myself last year, which was double what I did in 2024. As far as the difference between people that use our down payment assistance and people that just use our first mortgage without down payment assistance, I would look at it more longer term. Over the past 5 years, we've certainly seen a big increase in the number of people that don't necessarily make use of the DPA, that they can just use our program because of the rate. We're going to see more of that when our rate is further below market. We just dropped our rate, Monday? Very recently to 5.875. So whenever there's a bigger gap between our current interest rate and the interest rate in the marketplace, you will certainly see more people that will take advantage of it that don't need down payment assistance.
Follow up to that, do you attribute that to solely because we've seen over the last few years a spike in interest rates, so you can now get something below that? Or is it solely interest rate, or is it more people are aware of the program? Is it education? Are more companies or mortgage companies like Across Country or other ones familiarizing themselves with the program and getting an education? Is education, I should.
Yes. All of the above. We've certainly added a goodly number of lenders to our program. We had 24 new ones sign up last year. Additionally, there are many of our lenders, and Cross Country is a great example of that really focuses on education. Whether it's for real estate agents, we've done those classes, we've partnered to do them. And also just getting out in the field and visiting those offices and talking to those real estate agents. And we're very grateful for that you get out there and educate them. We also do a lot of home buyer events, either with our lenders, with nonprofits, with local governments, where we will go out and perhaps exhibit and speak at these actual home buyer events. So the people that do what I do as business development account managers, we're out there all the time. And it doesn't matter if it's evening, weekends, what have you. When they want us to come speak, we're going to show up.
And kind of going off of that, because obviously we were involved with a lot of the education piece we did last year. What are some of the misconceptions of MSHDA that are out there? Because
There are many. I think from a real estate broker agent's perspective, timing is a big one. Many of them seem to think that when a file comes into MSHDA, that it grinds to a halt, and that's absolutely not true. Our goal is to turn files that we receive from lenders in 24 to 48 hours, like 80% of the time. Last year we did it 90% of the time, in spite of the fact that we almost doubled our sales price limit the 1st of May, which had a huge impact on our volume. It went way up. And yeah, we slowed down a little bit. You know, there were a couple 3-week period there where we were longer than that 1 to 2 business day turn time. But shout out to our underwriters. God love them. They worked overtime the entire summer. Since then, we've been able to put on a couple of more underwriters, so I am fully confident that our turn times are going to remain 1 to 2 business days, 95% of the time. Sure. It's all a good thing. The other thing is back to down payment assistance. Many folks think that's the only reason you would want to come to MSHDA is because of our DPA program. Again, not true. You know, you can get an attractive interest rate with the non-DPA. You can get a break on your mortgage insurance with that. So that's all to the good as well. Trying to think some other misconceptions related to MSHDA. Oh, that it's only for low-income borrowers. Again, not true. It's a low to moderate income program. Our income limits range from $95,600 to over $182,000 for household income, depending on where in the state you're purchasing that home, because it's based on what the median area income is.
yeah, one thing I negated to talk about early on, and you just kind of mentioned it. What is the sales price now for MSHDA in the state of Michigan?
$544,233. Now, when you consider our income limits, how many deals are we going to see at the top end of that? Probably only in those counties that have the higher income limits. But when you're talking the $250,000 to $400,000 range, I think that's kind of the sweet spot. Raising that income limit certainly opened up the ability to use MSHDA in cities where it had been difficult to do over the past few years. You know, Traverse City, Grand Rapids, Holland, those kind of areas. We're now seeing many more loans come out of those particular municipalities.
Yeah, and for those of you who are watching this, let that sink in. That's a high price point, and you're right. You know, in our experience, we've probably not seen a lot that high, but that sweet spot you mentioned is just not for that low income person. Right. And if people want to take care of it's 5.875 currently is the MSHDA without the non DPA, and that really can save some people if they need the PMI. But we have had situations where we had customers put down 20%. Yeah. So that really dispels that myth or misconception that MSHDA is just for that low income.
Yeah. And MSHDA used to have a cash asset restriction of $20,000. We got rid of that. So it doesn't matter how much money you have in the bank. As long as you meet those income limits, you're going to be good to go. So, another misconception regarding MSHDA, that it's only for first-time home buyers. Again, not true. There are certain areas of the state, we have, I believe, 17 counties that are called non-targeted, meaning you have to be a first-time home buyer, you haven't owned a home in the previous 3 years. But even within those counties, there are targeted municipalities, and we can use Kent County as an example. It's a non-targeted county, have to be a first-time home buyer. Unless I'm purchasing in Grand Rapids, Kent City, Kentwood, Wyoming, or Spencer Township. If I'm purchasing in any of those areas, I don't have to be a first-time home buyer. The remaining counties in Michigan are all targeted in their entirety. You don't have to be a first-time home buyer to use our program.
I think you bring up another point that can be a misconception when you talk about first-time home buyers, you know, in determining that. Like that's I ran into that a lot this year. I had, it was the summer of divorce, unfortunately. And I had to correct some of my own underwriters about the rule that the agencies, Fannie and Freddie, have when it comes to, let's say, a single parent or a person displaced from a marital home that was owned jointly, because technically the agencies still qualify them as a first-time home buyer because it was owned jointly. And so speaking on that, you guys, it isn't a loan program, MSHDA. You guys, we are using our loan programs and using you as more of the lender, correct?
We're an investor.
Investor, I
Would
should
be-
say
yeah.
investor, correct.
Investor
So,
is a good
you
way to
know,
describe it.
I think the big misconception is if we're underwriting a Fannie or Freddie loan and we're going by their guidelines and it's a conventional loan, then really we're just going to you guys for the money to loan that to, because the money is cheaper for that client than it could, say, if we sell the loan to Fannie Mae or Freddie Mac in the long run, or a different investor.
Yeah, generally, and it's I guess the way I put it is under the MSHDA umbrella, you can offer certainly all the government loans, RD, VA, FHA, and then we also have our own conventional product. So we act like a Fannie or Freddie in that that investor space, but we also have our own overlays on those programs, and they're not as many as they used to be, for sure. We've tightened up that program, we've streamlined it, but the main things: sales price limit, income limit, targeted, non-targeted areas. We have some restrictions on acreage, which frankly we've increased over the years, so again, making it an easier program to use. But yeah, primarily you're going to follow the loan type guidelines, except for those specific MSHDA overlays.
And every investor, you mentioned the term overlay, and I know, and for those watching from the lending side, an overlay, it's like a good example would be if you went to a local bank or a local credit union. How come they only loan with 20% down and their minimum credit score is 680 when we can loan at a 600 or a 620, or in MSHDA's case a 640? It's because they have different overlays. Every investor judges their risk how they want to loan money. So getting into that, we've taken out the misconceptions, or have tried to. Education helps, but for the agents out there, real estate agents, again, why is it important for them to consider MSHDA for their buyers? Or why is it something, they're supposed to be good stewards for their buyers. That's what they're, and act as an advocate on their behalf. So why is MSHDA, how can that help them? How can MSHDA help an agent with their buyers, or potentially get more buyers or sellers?
Most of the successful real estate agents I know do not focus on just one niche part of the market. They want to be able to offer programs to people across the
Lenders
income.
Either.
Well, yeah. Well, across the income spectrum. If they're able to do that, this person that you got into a MSHDA home, perhaps when that was the only thing they could qualify for, 10 years down the road may be in a different position, and if you were the agent that they can trust and helped you out, they're going to come back to you. So this can be a leader for them when they're using that program. Additionally, it's simply going to increase your client base. There are many MSHDA buyers that I've spoken to over the years that make it very clear that they would not have been able to purchase a home at all had it not been for the assistance of MSHDA. And those are primarily the folks that perhaps need down payment assistance. But and as far as those down payment assistance buyers are concerned, I think they're great buyers. I mean, one of the other misconceptions about MSHDA is the strength of this purchaser. Yes, our credit score requirement is 640, but our average borrower has a credit score of 720. Our debt to income ratio requirement, the top end is 45%, but our average borrower's DTI is around 32. So many of these folks are very strong buyers, and it's up to the lender to determine that. We don't approve those loans. Those loans come into you as a lender. You're going to approve it and underwrite it in your office. It comes to us and we review it for compliance. Does it meet our income limits, our sales price limits, etc.? So, I think the best favor a real estate agent can do themselves is to develop a relationship with an experienced MSHDA lender, such as Cross Country. You guys do a lot of those loans. a real estate agent can come to you and be confident that you're going to know the program darn well, near as well as I do, in some cases.
Well, if not, we'd call you.
Yeah.
And I think, though, what you're talking about, Nancy, there's another misconception is that MSHDA is its own program completely. We get it a lot. Like, what's the MSHDA appraisal going to say? And it's, well, there's no such thing. It's a conventional appraisal, or it's an FHA appraisal, it's a VA appraisal. So I think that's another thing that's a big misconception. And I think that's why I love partnering with you, is to get out there and educate. Because one of the things we try to do, again, if it's what's best for the borrower, that's the way we're going to take them. Now, not all lenders do that. They look at, and not that MSHDA is a difficult loan to do. If you're educated, it's relatively simple if you follow the guides.
Yeah, and just like anything else, though, we all, I think, can sometimes be resistant to learning new things. It takes a little bit of investment in your time and your intellect to learn how to do it. I'm fortunate. I only need to know MSHDA. You, as a loan officer, you need to know FHA, VA, RD, conventional, and MSHDA. So, and as our underwriters do as well. But I can see where that could be challenging for some folks, but the benefits they get from learning it, I think, far outweigh any kind of sacrifice of time or...
Well, and expanding on what you'd mentioned earlier about the affordability piece, I mean, that's a big thing. And we've got things happening right now where the credit bureaus are upping their fees, which cut into what a borrower can do. So, we're just rehashing, but the rate is lower, especially if we don't use the down payment assistance. The PMI is lower, so for those private mortgage insurance. But these are the things that make affordability not that big of an issue.
Right.
And that's why we try to educate, and appreciate you coming on, because this misconceptions of MSHDA are... I mean, there's so many more we can mention, because there's just bad education out there. I know we both have had experiences where we have a MSHDA offer, we send in a listing agent, is like, well, like 8 years ago, I had a deal that took 6 weeks or 8 weeks or what have you. And
you know what? If you're talking of MSHDA really more of 10 to 20 years ago, fair enough. But what I think is really admirable about this agency is that they believe in collaboration. And certainly more so over the past several years. We take that feedback that we get from our lenders and we make changes. I mean, in 2025 alone, we had many significant ones. We increased our sales price limit. We increased the amount of acreage. We allowed single-wide manufactured homes, not just multiple section manufactured homes. We allow gifts of equity to count towards the borrower's 1% contribution when they're using our DPA. All those changes are a direct result of what we hear from the lending community. This is what's going to make your program better. This is what is going to make it easier for borrowers. I think we've become very good at listening to that and making those changes where we can make them. And we're very dedicated to continuing to innovate so that we can collaborate with our partners and just make a better program for all of us.
When you mentioned innovate, and I think going personally opinion in 2026 and beyond or whatever, we've started to see a shift in the market where it's going to be more innovative, where if you are not open to change, if you're not open to education, if it's MSHDA, if it's different type of loan programs that are outside the box that may not be comfortable. And I'm not just saying for agents, and this goes for loan officers, this goes for everybody in the real estate community. If you are not open, and this is my personal opinion, I think we're going to see a shift. I think we're going to see a shift to different loan programs, and you're going to have to start thinking outside the box to add those buyer pools. Because maybe if there is an inventory limitation or maybe buyer limitation, how do you not get left in the dust?
Yeah. And you're seeing that not just out of the mortgage community, but you're seeing it from your local governments as well, whether it's improving their zoning requirements so that they can have denser neighborhoods, so that they can add more housing, or maybe they're allowing accessory units, things of that nature. So, like I said, it's not just in the mortgage industry, it's also in your local and state governments trying to be more open to different things. And we're certainly looking at items for the future. I can't say what's going to happen and when it's going to happen, because we have a lot of priorities we're working on right now. We're putting in a new lender online system, which you folks are familiar with. That's where you go to upload your files and whatnot. That's always a big undertaking, and that's kind of number one on our hit parade right now. But we're always going to try to consider other programs too. I just don't know what they're going to be yet for 2026.
Nancy, speaking on those programs right now, though, what we've got, or you can do what all with the MSHDA program now? FHA, USDA, VA, conventional. Is there anything else on top of that?
We had a couple of programs over the last 2 years, just to use as an example, that we will launch and use as long as the money lasts. For instance, we had the rate relief program. That's where the Federal Home Loan Bank purchased a $50 million bond from us to offer a substantially lower interest rate. We went through that money, so that program is ended. After that, we did the first generation down payment assistance program, where for buyers who had not owned a home in the previous 3 years and their parents had not owned a home in the previous 3 years, we were able to offer more money in DPA assistance. It was $20,000. Again, we went through those monies. It was a very successful program. Are we going to do something like that in the future? More than likely, but what they're trying to look at there, what programs can we develop that suit the needs of the people in our state? Right. Those are things that take a lot of thought and a lot of input. What's going to be coming down the pipeline in the future? At this point, I don't know. All I can say with confidence is that we're going to continue to innovate and try to develop programs that address it.
And it seems you and I have had personal conversations about, you have a new director who came in, and one of the things I think was key that
Tanya Kuhn.
I thought nobody, right, Tanya, that talked about, one of the things that innovated was, recognizing where people are moving to, okay? There's only so many houses in the city or in Grand Rapids, and everybody wanted them, so affordability. So we saw people spreading out, at least in the last couple of years and whatever. So one thing that you guys changed that I thought was big was the acreage, because there is homes that maybe are on 2.5 acres or 3 acres or 5 acres that weren't necessarily working farms or splitting off or whatever, but it's just people had to move that way because of availability of homes.
Yeah, Tanya was very open and instrumental, frankly, in getting some of these changes made that lenders have requested from us for a long time. Acreage being one of them. Previously, we allowed 2 acres with exceptions up to 5. Now it's 5 acres with exceptions up to 10. I think another really impactful change that she helped make was the allowance of non-applicant household members. Previously with MSHDA, every adult that was going to occupy that property had to apply and credit qualify. We got rid of that. We can now have non-applicant household members there. We still need to know their income. It's a household income program. But the way our rules were stated before, it definitely knocked people out of the eligibility pool. If you had a couple, one had good credit, one had bad, they couldn't use MSHDA. That's no longer the case. We can go with just that one home buyer. That addition of being able to do single wide manufactured homes. Not as big of a deal here in the Grand Rapids area, but when you get up north, that's something that's impactful. So, again, she's very open to listening to what our lenders have to say and wanting to partner with them to make the program better. So, you have a lot to do with that, and we appreciate that input.
And Nancy, we've mentioned the acreage thing a few times.
Yeah.
Could you expand on why that? I mean, because I know why they have that. Could you share a little bit about why they had that restriction?
Yeah, it's part of our bond requirement, okay? When you're talking homes that are MSHDA financed, these are not investment properties. These are not properties intended for you to build one house and maybe split off some more and build another house or to be income generating. It's for homes. But the acreage restriction we had was just a little too restrictive. Something that I think many people missed in that announcement, though, in addition to increasing the acreage, we used to have a rule where you could not have more than 2 or more separate buildable lots. Okay, if it's a platted area, you now can have that. But what we're looking at here is we need to see it stated that that property is necessary to maintain the basic livability of that residence. So essentially what we're looking at, what's the common usage in that area? What are the comparables in that area? So it definitely opens up more properties for home ownership.
And we've talked about, obviously, all the positive things with MSHDA. But one thing I want to talk about is, and it's not that's a negative whatsoever, but with the DPA, I'm going to be very clear, that is something the consumer home buyer pays back at some point.
Yes. And there can be some confusion in the public about that. And you know what? It's well warranted, because occasionally we'll come into pots of money where we'll offer like a first-time home buyer grant. Those programs tend to be very short-lived and few and far between, but they have happened. But our down payment assistance program, our bread and butter one, so to speak, has always been one that has to be repaid. It's basically a zero interest soft second loan. So it's not accruing interest over the life of the first mortgage. The borrower is not required to make payments on it during that time, but it does eventually become due. And it becomes due when they sell, refinance, pay off that first mortgage, somehow transfer home ownership interest, then that DPA becomes due in full.
With that, are there any other, and we've talked about all the positive stuff about MSHDA, which is a lot of it, is there any drawbacks to the MSHDA program that?
If I would think of a drawback, and it's one that we've actually kind of alleviated, and that would be recapture tax. Recapture tax is a tax that the federal government imposes on all states' housing bond programs like MSHDA and the Rural Development Direct Loan Program. And what it says is, if you take that MSHDA finance home and you sell it within 10 years of purchase, you're making significantly more money than you were when you bought it, and you gain on the sale. If all three of those things happen, you may owe a portion of that gain to the feds in the form of recapture tax. In Michigan, we saw that as a barrier to people using our program, so we'll reimburse anyone that gets hit with recapture tax because they used the MSHDA program. So I can't say we made it go away. I mean, it's a federal tax, we can't do that, but we've definitely eased the pain of it. Once somebody pays it, they have to provide us proof they paid the IRS, copy of their tax return, copy of the, I believe it's the IRS 8828, it's the form they use to figure out how much they owe, and we'll write them a check.
Yeah.
So, and you know, one thing we haven't mentioned here that I think is worth mentioning is the Mortgage Credit Certificate Program. In addition to our loan program, we can also offer a federal tax credit. The MCC allows the borrower to credit 20% of the mortgage interest that they pay on their federal taxes. It's good for the life of the mortgage. It's not done with a MSHDA mortgage, so I can't tell you what the term is. It's, you know, whatever term that lender decides to do for them. For the right individual, it can save them tens of thousands of dollars over the life of that mortgage. One thing I always say when I'm talking about the MCC is I'm not a tax expert. I don't know many loan officers that are tax experts. You know, if you have a customer you think might benefit from it, by all means have them talk to their tax professional. But yeah, it can be substantial savings. I think you want to avoid it for people that don't have any taxable income, because it's what's called a non-refundable credit, meaning it's only really going to help you if you have tax liability. Sure. So, and you can use it as a lender to gross up income. Mm-hmm. So if you have someone that's borderline qualifying, that credit can potentially put them over the top.
Sure. We've talked about a lot of stuff with the program, but I wanted to ask, is there any unique MSHDA success stories you could share with us?
There's a lot. There's a lot of them, but I actually quizzed some of our staff to see if they had any new ones they wanted to share with me, and I was imparted with one that I thought was quite nice. There was a young lady that wanted to purchase a home with her mother and her brother. Her mother and her brother both had some health issues. Mom was functionally blind. The brother had some development issues. So they ran into some problems when it came to like doing the home buyer education. Lender went above and beyond. She went with them to the home buyer education class because a lot of it is visual as well, and we have made great strides in making sure that these classes are accessible, but the lender wanted to make sure that they got the information in a way that they could understand it. So that was one piece of it. About the time that happened is when we launched the first generation DPA program, because these folks, it was questionable if they were going to be able to qualify. But one of my colleagues that does what I do contacted this lender and let him know, you know what, there's some first generation funds left. So with $20,000 as opposed to $10,000 in down payment assistance, we were able to qualify these folks. On Christmas Eve, they got their keys for their home. So, you know, that was an amazing thing. And for these folks, it was literally life-changing. So, you know, but there are many, many stories like that. You know, some of my favorites are when I'm exhibiting perhaps at a lender event, like for the Michigan mortgage lenders or Michigan bankers. I cannot tell you how many bank executives I've had come up to my table and say, you know, my first loan was through MSHDA, you know, back when I was a teller or whatever. And I love that. And I'm like, look at you now.
Nancy, thanks for joining us today. Is there any other things you want to get out there about MSHDA to leave us with?
Just that, you know, like I said, the amount of money that we're investing is growing year after year. And we're really hoping to carry that momentum through 2026. Not only do we partner with lenders and real estate agents, but we also have our regional housing partnerships. We have funds that these partnerships apply for where they're able to develop more housing stock within their communities. So again, my expertise is in home ownership, but MSHDA covers a lot of ground. And if you want to learn more about us, by all means, go out to our website, read about the new things that we're doing. And, you know, I think 2026 is going to be a really exciting year for us.
Well, thanks for that. Thanks for tuning in to Insight to Impact. As you can see, there's a lot of education that can be had with the MSHDA program. You want to make sure you take advantage of that and get your homeowners, or if you are a home buyer, get yourself into a home using the MSHDA program.